In today's video, I'm going to be covering the fascinating world of strata insurance. In recent years, the cost of strata insurance has risen dramatically. While this does affect the market as a whole, the pain has not been evenly distributed. That means it's more important than ever to have a keen eye when purchasing. When living in a strata, there are two different types of insurance you need to know about. There's insurance on the strata itself, and then there's unit insurance. Let's start off with the strata policy. Strata insurance is a policy taken out by the Strata Corporation. This policy covers things like the building's original structure, electrical systems, plumbing, and common areas like the lobby or the parking garage. However, it doesn't cover things like personal belongings, unit improvements, or damages caused by negligence. It's important to review the policy's coverage limits and deductibles, as you might be on the hook for part of this cost if a claim is made. As an owner, you'll need personal insurance for things like belongings, any upgrades, and liability for accidents inside your unit. This is often called condo or unit insurance and is a separate policy from the strata's insurance. Some policies can even cover you for the strata's deductible in the event that you're found responsible for damages to the building. That last sentence is an important one. Strata policies, like all other policies, have deductibles, and these deductibles can sometimes be hundreds of thousands of dollars. If you cause damage, you could be responsible to cover those costs. This can obviously be enough to bankrupt you, which is why it's so important to understand what your responsibilities are and what you're liable for. As I mentioned before, having the right policy can help protect you from this risk, so make sure you discuss it with your insurance broker. So when you're considering a strata property, make sure to thoroughly review the financial statements and the meeting minutes to see if the strata has been making claims. If they have, the cost of insurance will probably skyrocket when it comes time to renew. This means higher strata fees and larger deductibles for future claims. If the building has had multiple claims, it's a good indicator that it hasn't been properly maintained. This means that special assessments or large fee increases could be coming. It can also affect your ability to sell in the future. I know that it can be difficult, but try not to fall in love with a unit that you don't own. Often we don't get access to the strata documentation until after we have an accepted offer. Stay objective and know when to walk away. As I mentioned earlier, there have been a lot of changes to strata insurance in the past few years. These changes have driven up the cost, and I do expect this trend to continue. So keep that in mind and budget accordingly. If you have any questions about strata insurance or real estate topics in general, please feel free to reach out anytime, and I'd be happy to go over things in detail. I hope that you found this video helpful. If you did, do me a favor and give the video a thumbs up, and consider subscribing to my YouTube channel for more real estate advice. I appreciate you taking the time, and I'll catch you at the next one. Thanks for watching.